FIFO, LIFO, HIFO explained, optimizing your crypto taxes. Key takeaways. FIFO, default IRS method, may lead to higher taxes in bull markets. LIFO, can reduce gains in a bull market but risky in downtrends. HIFO, most tax efficient but requires precise transaction records. Until 2025, you can use LIFO or HIFO without notifying exchanges if your records are audit ready. Understanding how your crypto trades are taxed can make a big difference in how much you owe the IRS. With the flexibility to choose different accounting methods, FIFO, LIFO or HIFO, you can optimize your taxable gains and reduce unnecessary tax burdens. Let's break down these methods, their tax implications, and what you need to know before the 2025 deadline. IRS reporting updates. What's changing? The IRS issued Notice 25-7 clarifying that while exchanges like Coinbase, Kraken, and Gemini aren't fully prepared to provide specific identification reporting, investors still have options. Until the end of 2025, you can continue using LIFO and HIFO without notifying your exchange beforehand, as long as you keep your accurate records. That means you have more control over your tax strategy, but only if you document transactions correctly. How crypto sales are taxed. When you sell crypto, the IRS calculates taxable gains based on your cost basis, what you originally paid for that asset. The method you use to determine which crypto you're selling, HIFO, LIFO, or FIFO, can significantly impact your tax bill. Each method prioritizes different transactions which can either increase or decrease your taxable gains depending on market conditions. Here's how they work. FIFO, first in, first out. How it works. FIFO assumes you sell your oldest crypto first. This method is the IRS default if you don't specify another approach. Example, January, buy one Bitcoin at $25,000. July, buy one Bitcoin at $35,000. December, sell one Bitcoin for $50,000. Taxable gain calculation, FIFO. Sale price, $50,000. Cost basis, $25,000. First Bitcoin purchased. Taxable gain, $25,000. Tax impact. Higher taxes in a bull market because cheaper, older assets are sold first. Lower taxes in a bear market when selling higher priced assets bought at peak prices. LIFO, last in, first out. How it works. LIFO assumes you sell your newest crypto first. Example, January, buy one Bitcoin at $25,000. July, buy one Bitcoin at $35,000. December, sell one Bitcoin for $50,000. Taxable gain calculation, LIFO. Sale price $50,000. Cost basis $35,000. Most recent Bitcoin purchased. Taxable gain $15,000. Tax impact. Reduces taxable gains in a bull market by selling higher cost assets first. Can increase taxes in a bear market if lower cost assets remain unsold. HIFO. Highest in, first out. How it works. HIFO prioritizes selling the crypto with the highest cost basis first, minimizing taxable gains. This method falls under the specific identification method, which requires accurate records. Example, buy one Bitcoin at $25,000. Buy one Bitcoin at $37,000. Buy one Bitcoin at $42,000. Sell one Bitcoin for $50,000. Taxable gain calculation, HIFO. Sale price $50,000. Cost basis $42,000. Highest purchase price. Taxable gain $8,000. Most tax efficient method as it reduces taxable gains by selling the highest cost assets first. Requires accurate tracking to comply with IRS reporting requirements. Key takeaways. Which method should you use? FIFO, default IRS method, Not ideal in bull markets due to higher taxable gains. LIFO helps reduce gains during bull runs but can be risky in bear markets. HIFO, generally the best strategy for minimizing taxes but requires detailed records. Accurate records is essential to support your filing. Safe harbor rules and IRS compliance. Notice 2025-7 provides a grace period allowing investors to use specific identification methods without prior exchange notification. However, proper documentation is still required for IRS reporting. How to stay compliant. Track every crypto transaction. Ensure all purchases, sales, and cost bases are documented. Complete your inventory snapshot. A snapshot of holdings on December 31st, 2024 is critical for 2025 tax reporting. Keep records per IRS safe harbor rules. Use reliable software or a tax professional to maintain audit-proof records. Miss the deadline? CryptoTaxAudit can help you rebuild your records to stay compliant and avoid IRS issues. Final thoughts. Choosing the right tax method can significantly impact how much you owe. With the IRS increasing enforcement, now is the time to optimize your tax strategy and stay ahead of compliance requirements. Need help with your crypto taxes? Protect yourself with CryptoTaxAudit. Beyond filing, we defend you. At CryptoTaxAudit, we do more than just file your taxes. We protect you from IRS scrutiny. Most crypto tax services stop at calculations, but when the IRS starts asking questions, we step in to defend you. Whether you're dealing with complex tax situations, expatriation, business holdings, DeFi trades, or large Bitcoin transactions, our team ensures you're compliant, audit-ready, and IRS-proof. Don't wait until the IRS comes knocking. Secure your portfolio today. Schedule a call now and get protected. Before you go, here are some questions that we regularly get from clients. Which accounting method is best for minimizing crypto taxes? HIFO is generally the most tax-efficient method as it minimizes gains by selling the highest cost assets first. However, it requires accurate records for IRS compliance. Do I need to notify my exchange to use LIFO or HIFO? No. Under IRS Notice 2025-7, you can use LIFO or HIFO through 2025 without notifying exchanges, if you maintain solid documentation. What happens if I don't document everything correctly? Without accurate records, you default to FIFO, which may lead to higher taxes. You could also face audit risk and IRS penalties for non-compliance. How is CryptoTaxAudit different from other tax services? Most crypto tax tools stop at calculations. CryptoTaxAudit defends you when the IRS investigates. We ensure every trade, snapshot, and method is bulletproof and audit ready, not just filed and forgotten. This blog was read by Liam Higgins, Senior Account Manager at CryptoTaxAudit. Thanks for listening.